Welcome back. Well, let's get to the technicals of the market. We have Atul Suri, CEO of Marathon Trends, who joins us. Hi, Atul. Happy Diwali to you, to your family, all your loved ones. Hope it's been a good one, and I'm sure you've got big plans for the weekend. So thanks a lot for joining in here on CNBC TV 18.
Thank you. Thanks, Nigel, and happy Diwali to all of you and the viewers.
All right, Atul, let's get straight to the market action then. We're down close to around 7% after the super run that we've seen, more than 20% in a single year. What's your take? Where are we headed from here on? Correction, one would say, is par for the course. We're cooling down, catching breath, and then maybe, in fact, we start the up move. Or the other school of thought is maybe we go down and, test that 200 DMA, which is another 3 to 4% from here.
I think it's been a great year. Just the last month has been a bit of a dampener with about 6% downside on the market. So, but I also look at that in a certain amount of positivity. If you look at the number, the FISL number was 1,17,000 crores. That's a massive number. That's the highest number ever. And if we have to go back, we have to look at something like March 2020. That's the COVID month where they sold about 65,000 crores. Obviously, the index also has doubled. But remember, at that stage, the market fell 40%. And today, we have been able to absorb such a large selling thanks to the domestic flows, but with a 6% kind of hit. So actually, I feel that it really demonstrates the point that Indian market, the market depth has increased, where you can sell about a 1 lakh crore stock, and yet you will find that the market has not collapsed. So I, for one, look at it as the glass half full. Obviously, these kind of adjustments, which came as a surprise thanks to the China trade, etc., are not going to go on forever. The important thing that comes up for us right now is the kind of earnings that are coming out. They are a mixed bag. There's no sector where there are outright winners or outright losers. What you're seeing is even a sector like FMCG, which has got hammered, where the feeling is things are bad. Some stocks have done well. Even among banks in the private sector space, some stocks have done well, some have not done well. So what I feel is that going on, the China trade or that massive FI number will at some point in time pause or the pressure will reduce. But what is going to happen in the next few months is really what sort of numbers come out. As I said, they're a mixed bag. There is no sector or theme that is absolute clear-cut winners. What you're seeing is in every sector, there are going to be winners and losers. So I do feel for the next few months, things may be a little more stock specific. But beyond that, I feel that the government the country's macros are fantastic. As I said, the government has a lot of bullets. The bullets have been retained. They've not been fired. And I do think that the government will take action to revive the flagging demand and the economy. And I do think that maybe towards the second half of the year, the market would really do a big pullback. So that's my sense. Going to be a little mixed, more stock specific in the next few months. But the second half of the year, I feel, would be much, much better at an index level.
Atul, hi. Happy Diwali. So where's the party tonight?
It's been... You can see I'm coughing. It's been 4 days.
No, we hope that you manage to make something out of it. We're sure you will. But really wish you plenty of joy, happiness, wealth, and prosperity. Thank you for being with us through the course of the year and through all of these conversations.
When the index is good, this is what happens. The parties go many days and much longer. So I guess this year in Bombay, at least, I'm seeing record number of night outs here.
Oh, yeah, absolutely.
And I'll tell you what, Atul will be burning the calories after that as well. Fitness freak. He'll be doing that Pali Hill run and the Card Road run and burning the calories after that.
Atul, by the way, a viewer has just messaged me. I'm not joking. This is live. Good evening, Prashant here. He said, look at a glass completely full. Worth the tipple. I'm not kidding. He was listening to you, glass half full.
Yeah, it's definitely Diwali, and you can't fault us, right? We have the right to be in a bit of Diwali humor mood as well.
Absolutely.
But
why not?
So Atul, to kind of go back and some of the view on the market first before we talk sectors and individual sort of themes. I remember the last conversation when you joined us in the studio, you were actually extremely bullish on the outlook going forward. So has this October correction changed that view in any way, altered that view at all in terms of the index levels? Because you're saying now the second half will be stronger. So are you saying second half of the fiscal year or second half of the calendar year, the new year, 2025?
So what I feel is, Surbi, that the longer term, medium term bullishness persists. I do see that we are going to, within 12 months from now, challenge and break out to new highs. Yeah, as I said, that there has been a pause. One has to respect the kind of record FI is selling that there is. Also, there has been a huge money that's withdrawn from the market thanks to IPO funding that has come in. Also, you'll realize is that the numbers are mixed. So the market needs to take a pause. And it's very important because, for a market, for a bull run to sustain, you need to have intermediate corrections. You need to have pauses. You need to have some sort of reality check. And I feel that without much damage, even if the markets go sideways, spend some time where the poorer quality stocks that are not backed by numbers correct, and wherever the numbers come, do well. I think it's very important for the overall health of the market. I
For
still continue
sure.
to be very optimistic of the market. I still think that before next Diwali, well before next Diwali, we would, hit a new high. We would push more towards the 29,000 to 30,000 level. Again, I'm not giving any targets, but what I'm trying to say is that we, as an investor, I do see the next 12 months to be continue to be rewarding.
Oh, this is great. Next Diwali, maybe 29,000 or 30,000 on the Nifty. That has a lovely ring to it. So yeah, I mean, we're going to kind of remember that. And Atul, also on the downsides, because the Nifty has been sort of really sulking under the onslaught of the selling. So if you could tell us
Right.
some of the downside levels that are important that you would be sort of looking at as well as we go through the next 12
I think
months.
I think the immediate area of concern would be around 23,200. The reason is that obviously there's a pattern formation, but more importantly is that just if you look before the election results, the top was around 23,000, 23,200. Then we fell at 8-9%. So I feel that just that pre-election level will work out as a very big base. This is around 23,200, which is what about 3 to 4% lower than here. So I feel that that's going to actually be a very big solid base. That would be the area of immediate concern. Uh, as I said, that the year is long, there are many variables, things can play around. But more importantly, for an investor who's got some time, who can withstand a little bit of volatility, I feel that those places or these zones between 23 to 24 will be a fantastic area to invest in. A lot of investors had waited for corrections. Some are expecting a 8%, 10% correction. The market is giving you that kind of correction. There is no structural issue. Yes, things get mixed. There has to be a reality check. Excesses get done, and those are getting corrected. So I don't see any structural issue that is a problem with the market. Corrections, it's just
Right.
par for the course.
Okay. I think, we've been sort of popping these, in a way, mini bubbles, right? I mean, defense as a you pricked it. Better to prick smaller bubbles than one big, huge one, right? And then that kind of affects everyone.
Absolutely.
So,
It's like a pressure cooker, Prashant. It
yeah,
needs to have that, whistle. You need
yeah,
to have that, the steam needs to be let out. If it is
yeah,
not, it's going to burst one day. So
yeah,
I think even in a rally, for it to be longer, more
yeah,
consistent, and more wealth creating, you
yeah,
must have intermediate reality checks. And I think we're just going through one, and it's nothing in the bigger context of things. It's nothing for an investor who's come in a year ago or two
yeah,
years ago. It's a problem for somebody who's just come 3 months ago. And if
yeah.
they survive this 3 months, 6 months of volatility, I think it will be fine.
All right. Atul, talk to us about themes. I mean, as they say, fish where the fish are. So, which are the ponds where
Absolutely.
there is abundance of fish, as
No,
themes or
I think that,
as
that
ideas? Yeah.
what I am looking for in this, Prashant, is that in this 6 to 8% kind of correction, what are the sectors that are falling less? Because I feel that as and when markets reverse, you will find leadership or early breakouts happening here. So if you look at a market that has been corrected for the last 1 month, the first sector that stands out, and a sector that I have been underweight, not very optimistic on, is private sector banks. But I feel private sector banks are holding out very well. So I feel that a sector that has not done well for 2 years, selectively, some of the private sector stocks, private sector banking stocks can lead out. Some of the PSU banks also, which have been beaten blue, and all PSUs have been written off. I do think that they can also do a comeback. So I feel that banking as a sector, and it's very important simply because of the weightage banking has in the Nifty. I think that banking for once can be the early breakout. If that happens, it's very good for the index as a whole. Another space which I like, where I think the numbers are good, is pharma. Again, a wonderful sector. very good in times of uncertainty. So I think pharma is another sector that looks very, very good. I continue to remain very bullish on industrials. I think that the mega trend playing out for our market for many years is the whole industrial space, the engineering, construction related space. They have corrected. And as I said, that after a few months, when I feel the government spending can restart and there can be more aggression, I feel that the industrials will do well. So these themes would play out. But in the next few months, I feel it's going to be a little more stock specific, because in every sector, you'll find that, as I said, private sector banks, some have come out with fantastic numbers, some have not come out with good numbers. And that's why you'll find the market being a little more differential, not very thematic or sectorial. But I feel to the second half of the year, industrials will continue to lead and be leaders for this bull market.
All right. Atul, let's focus on a couple of other important commodity moves then. Gold, that's been twinkling. We are boasting about, the markets giving good returns, up 20%. Gold is up 20% as well. Where do you see that one headed? Right. And also on Brent crude, I recall you telling me, that $70 per barrel. Well, that's pretty good news that, that oil is weak, but you don't expect it to hit that $70 per barrel. In fact, it could be a bit of a negative. It'll show how weak demand is. So where are both these two headed?
So I feel gold has definitely been a sector, stock, theme, which has clearly broken out big time. It is almost like a super cycle kind of breakout. So it's around 2750 in dollar terms. My target is around 3125. That's another 14 to 15% upside. So that's fantastic for a commodity that's already trending well. For traders, there could be a catch-up that happens in silver, because silver is something that is relatively underperforming. So I feel that towards the end of the rally, silver could also do a very big catch-up. So I think that's where I look at precious metals. The second area that's of great, great importance to us is crude. And what I look at with great amount of optimism or positivity, that in spite of all the problems in the Middle East, gold is not able to even take out 80. It's, as I said, my target for gold is around 70. For crude, Brent crude is around 70. So I do think that commodity wants to go lower. In spite of all the geopolitical issues, you'll find that there is no spike. So even on so-called good news for the commodity is not going up. That clearly tells me that Brent crude's head is lower. I feel that we would see it at 70 sooner than later.
All right, Atul, we'll leave it there. Thank you very much for joining us. Enjoy your evening. Happy Diwali from all of us here once again. Thanks indeed.
Happy Diwali to everybody. Thank you very much.
Thank you very much for being.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.